Good morning. It's Thursday, December 14th, and Risk is back on in a big way. Lately, our audience on the morning show has tailed off a little bit, and you got disinterested at exactly the wrong time. It is just beginning for risk assets. I know markets, SPY, QQQ at all time highs. However, the party is just beginning for the type of stocks that retail likes, right? Risk assets, microcaps, biotechs, growth stocks. It is just beginning. Look at ARK over here as an example. Okay, let's take a look at let's go back like 5 years. Okay, look at that. Look at this. We are just getting started. Yesterday, we had the right read on FOMC. Both are kind of sense in the morning, although we didn't definitively say, but our sense was that we're going to be okay with lower rates. FOMC, we got that for the first time, as definitive as possible. We're now shifting to an expectation of lower rates. Okay, we're talking about probably a rate cut in March. We're looking at 75 basis points this year. It's risk on, and TLT is your North Star. Oh my gosh, look at this. We told you earlier this week and last week that if TLT breaks that 200 DMA, let's zoom into that. Here we go. If we break that 200 DMA, look out. We're going to get an absolute explosion in risk assets and risk stocks, and we are there. It's happened. We are there. It's not just technicals, it's fundamentals. So everything's coming together. Now, with risk assets, with rates going down, what's that benefit the most? KRE, gold, RK, IWM, XBI, okay? More so than QQQ SPY. You might even see some rotation, I think, out of some of these mega caps into some of these risk sectors. Oh my gosh, KRE, whoo, that's one of the best ones with the regional banks now with lower interest rates. But in any case, KRE was like up 5% yesterday. Here we go, up 4% this morning. Gold, RK, I mean, do we even need to look at this? RK, 51.33. That's your next resistance level, or 51.25 in pre-market. After that, 53.86. Look, I actually think we're going to get to this 200 week moving average. Now it's not going to go up in a straight line. Okay. I think I've seen this before. I think we may get a sell off in early January. So I think we're good for the next couple weeks. We might get a sell off in early January. Uh, Basically, the opposite of the January effect. The tax loss selling, it's the inverse, right? So whatever people are up on, they don't want to sell it in December, right? They're going to hold on to it because they don't want to pay the taxes. Then they'll take their profits in January. So see the opposite happening. The best performing stocks will keep on doing well through the end of December, and then they'll sell off in January. And the crap stocks like SMSI will keep on selling off through December, and then they'll do well in January. So, but in any case, I'm very bullish. This is the most bullish I've been in the market since I don't know when. Like, when did it all start? Since they rose interest rates. Oh my gosh, I nailed that high, by the way. If you were in our community, uh, wow, you see that like 159.70 up there? Pretty much to the day, I sent a very dire message to everyone in the community, and I was like, it's not going to be fun now with higher interest rates. Man, I should have just bowed out of the market until now. That would have full-time business. I see it every day, so I couldn't help but try trading. Okay, but in any case, this is the time to get back in. It's the time to get back into risk. Now, also, when we're looking at our stocks here, hold on. Yeah, thank you, Vince. Agreed. Be careful in January. Now, when we're looking at these stocks here, keep in mind, I'm still a story trader. I know, like the technical traders think it's all about technicals. I still disagree. The stocks that we have at the top of the list here, they also have catalysts, okay, or sentiment. Snap in particular, that had that big catalyst a couple days ago with the record high of the monthly the subscribers and the AI features. Air, we have the fundamentals really cheap we've been talking about and the interaction with onsemi. We have a catalyst this morning. Rivian, a catalyst with AT&T this morning. Some of these, it's also just evaluation, like Teladoc, CRISPR had the catalyst, Celsius valuation. There's multiple pillars at play. All right, I understand some risk assets will just go up just because that's the market we're in, but I avoid those, okay? Like UPST, I don't know anything about it. Seems risky to me. Whatever it is, I avoid it, okay? It might be the wrong decision, but that's how we do it here at Story Trading. We want multiple pillars to be working for us. So the top pick yesterday that we were really excited about was Carvana. We gave you a target of our breakout level of, what was this, 42 something. Here it is, at the top of this candle, 42.12. And I'm like, if it breaks 42.12, boom, I think we can swing to the mid 50s. And if you were in our chat room yesterday, right after Powell, like at 2:29, I put a message in there when Carvana was $40, and I'm like, this situation here with the FOMC decision will dramatically increase the odds of this Carvana trade working out. So I did increase some Carvana at $40 right when I put that message in at 2:30, and boom, up to $45. I don't know the trajectory at this point it's going to take, but this is a great environment to swing, in my opinion. All right, there's going to be volatility. I think you can buy dips. All right, we're going to go over, I think, like maybe like the top 10 stocks on my list that I think will do well in this environment, not only because of the charts, but again, because of the catalysts and fundamentals. And then I think the play is simply going to be buy the dips. All right. Yep. Carvana, Vince is saying 50 plus. I agree. So it's going to be either buy the dips or maybe start picking stuff up that hasn't really moved a lot yet. So I'm in basically all of these stocks are about to go through with you. But okay, so Carvana, we give you that swing target of the mid 50s over here, right in this territory, right? You see where all that resistance was? So yeah, it's saying 50 plus, exactly 50 to 57, that range. So mid 50s, I think that's where the next level of resistance, especially because wow, look at this. It's a double resistance there, 57. Beautiful. I love it, right? So that's going to be like a magnet, mid 50s to about 58 on there on Carvana in a swing period, maybe this month, maybe before the end of the month. All right, Snapchat. Snapchat, huge. Oh my gosh. I was waiting for a break of 1655, I believe it was. And we broke 1655, at least in pre-market. Again, we have the huge catalyst we just talked about. I think this thing's headed to 20 plus. I mean, do you guys see any resistance around here after that 1655? I don't know, man. And we're talking about an $83 stock that now has improving fundamentals and sentiment around some of their AI features as well. I think this thing's headed to 20 plus in a swing time frame. Air, our baby, my baby, had some news this morning. Man, I did shave off some of my call options 2 days ago, but I still have some, and I still have a big equity position. But 28.80, up 7% in pre-market on news. Guess what? The news is not even. Why is it not in Webull? It's not in Webull, but it is in Story Trading. Okay, so if you go to here, you'll see the contract right there. You'll also see it if it's on your watch list. Get into the data mine, or here, just pull it up like this. Let's pull it up like this. Okay, so put an error over here, go to data mine, or you saw the nugget that I just posted. Here it is. Air receives first order for. Why is this not in Webull? I don't know. Air receives first order for Fox wafer level test and burn-in system to be used for gallium nitride. All right. So what do I have to say about this? First of all, any catalyst can be a spark to kick something off. Any catalyst in this market environment, any catalyst. Okay. Now, what's my read on this? There's one positive and one, I don't want to say negative, but one neutral. All right. This is just for qualification. Okay. Meaning they're testing this out for gallium nitride. It's not a production order. Okay. So that's something to keep in mind. On the other hand, this is why it's significant. Do you remember when Tesla came out last year with something like our next generation vehicle is going to have less, or one of their smaller vehicles will have less silicon carbide, and Air was down like 45% that morning, right? But it did rebound eventually. But that shows you the concern of what happens after silicon carbide, right? Because technology is always advancing. What this is showing you is after silicon carbide, Air's technology is logical progression, right? Once they start moving to different materials, their system is good for this. So this is now good for sentiment in terms of long term, right? When you're looking at the PE or whatever, the doubters out there, the people shorting the stock, high short position, they're like, oh, this is a one-trick pony, or after silicon carbide is over, then their technology is going to be worthless. No, this is telling you there's hope out there that now they're going to be able to continue when it gets to the more advanced materials, gallium nitride. So this is something that's going to boost sentiment. It won't have an impact on fundamentals at all. Okay, so this move is about sentiment, long term. Who's pricing this in? Okay, but whatever in terms of fundamentals. My point is, you can't really calculate the value of this. Why I keep going the wrong app. Now we're going back to Webull. All right, this is really about sentiment. So you get a PR that says, hey, things in the long term might be good. So now when you're looking at our PE is getting low, we have a forward PE of 25 only. All right, so we've had a target on this stock of at least 28. We want to fill the gap from the onsemi earnings. Onsemi has basically filled that gap, I believe, or close to it. Yep, onsemi has basically filled that gap. So why not Air? And onsemi is headed to 200 DMA. Now with this catalyst, Air is going to fill that gap. Okay, that gap is at 29.30 right there, 29.36. The gap's at 29.36. I do understand there's some resistance at 28.75. We're right there already at the 50-day moving average, 28.75. So 29.36. And with any luck in this market, maybe we can, over the next couple of weeks, make a run towards the 200 DMA at $36. Possibly imply some resistance there at $32, $33 as well. But Air, I don't know. I'm already in this. I'm not going to add more on Air, up 7%, but I might look for dips to buy. Okay. Rivian had some news this morning. Rivian, AT&T buying some of their vans. It's a pilot program. All right. It's not a volume production deal, but guess what? Rivian above resistance levels here. 2022. It's above 2022. Wow. Okay. We may be headed to this area right up here, which is 2139 area, a little over 21. So Rivian in play with the catalyst today, with the technicals breaking out. Look at that rounded, beautiful bottom. Oh my gosh. These stock, everything is ridiculous bullish right now. So Rivian 2139 with a catalyst this morning. By the way, I'm going to stop at Amazon. Okay, these are my top picks. If you want a hint of what's going on, so Carvana, Snap, Air, Rivian, Teladoc, INVZ, CRISPR, Celsius, Amazon. Okay, and then that's enough, right? Probably a million others will do well today too, but those are the ones at the top of my list. Okay, let's move to Teladoc now. Teladoc, we've been looking for a breakout. If you've been following our show over here, now we got it into the gap. Okay, the gap resistance here at 2047. We're above the gap resistance. Oh boy. Okay. So lots of gaps this morning. So 2047 into that gap resistance. This is going to be a little bit tough, I think, to break. We'll see. If this does break that 20, well, now it's 2051. Okay, if we can get this area to be support, then I think we can make a run towards about $22, which is, see all these candles, support, 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 support at 22. Also, coincidentally, happens to be the 200-day moving average. So that would be my swing target on Teladoc, 22. All right, but I'd like to see a close above 2050. Yeah, around that 2050 area. If we validate a close above 2050, then 22 plus is where this can go this month as well. Okay, that's Teladoc. INVZ, all right, we've been on top of this since the low to the 220s, and I'm sticking with the target of the gap fill here, especially now with the lower rate. So 310 is the target on INVZ. You got support at 259, support slash resistance 259. So that one also in play. You should know all the catalysts in play with that, with all the big analysts and the big price target increases that happened recently, along with that short seller Citron, also long INVZ. All right, CRISPR, Celsius, these are lower on the list, less conviction on these because the catalyst is like, we know about it. Catalyst already came, was a sell off, but now in this market, it looks like it wants to rebound maybe to the 20 DMA, 66.91. It's up another couple percent in pre market. So, but this is volatile and it's a biotech. So, this probably would have kind of done this anyway, regardless of lower rates, right? So I'm in this stock, but I don't necessarily think this is the best stock to be in because of lower rates. This is just biotech volatility pre and post the FDA approval. It didn't hurt, right? It didn't hurt. It certainly did start going up with the market yesterday, but I think these other ones are probably better if you want to play the lower rate theme. Celsius, interestingly enough, does seem to be reacting to the lower rates. I really is risk asset. I guess it's a growth stock. Okay, it's a growth stock that is quote unquote overvalued by some people who think it's overvalued. I don't think it is because of the growth rate. I think it's actually undervalued. But in any case, I think that's what's going on here. I think the market sees Celsius as an overvalued growth stock. So when you lower the interest rates, then the value of this asset should go up. And I think that's what's happening with Celsius. So Celsius, in fact, because of the explanation I just gave you, I should probably put it ahead of CRISPR. So Celsius 50 DMA over there at 53.63 would be the next target. I'm looking for this to go to the mid 60s and all-time highs eventually, regardless of market conditions. Celsius was one that did awesome even through the crash, the market crash. This thing just kept going up because of the insane growth rate they have and the market share they're taking away from Monster and Red Bull. So Celsius going to move Celsius up above CRISPR a little bit. Yeah. All right. And then we come to Amazon. Throw a big cap in there. I do think it's small caps are better. All of these names I've given you so far are small caps. In this environment, I think small caps are going to outperform. But throw one big cap in there, Amazon. Amazon this morning, they got, I don't know, is it in the Webull app? I saw it on Twitter. Let's see if it's also in the Webull app. Okay, I don't even see it here. So this is what we have. I put it in our story trading app. Okay. Amazon named top pick at Piper Sandler. Price target raised to 185, implying 25% upside. You can read the details of what they're talking about there. So I might try out a little Amazon today. Let's just check the indices. You can see RK IWM up 2%. QQQ only up 0.4%. Okay. But anyway, let's throw Amazon in there. Let's take a look at the chart. So 149.46 is a resistance level. It's opening above 149.46. Beautiful. Let's look at the weekly. It's in a chop zone up here. So I don't have a great read on like the next candle resistance. Don't really see anything clearly there. Monthly. Let's go to the monthly. Okay. Monthly, maybe a clear read. Maybe we can make it to, maybe we can make it to 160 or so on Amazon if you look at the monthly. Okay. But in any case, you got a catalyst on Amazon today. Throw that one big cap in there. Might want to try that out. But aside for that, let me see if you want me to look at a ticker symbol, if there's any catalyst on a stock. I mean, this is the time. This is a great environment for retail. especially if you're like me. All right, man. If you like your mega caps, you did better than me the last couple years. All right, I was very reticent. This is the second time this week I'm trying to say that word. Reticent to get into mega caps. I've always liked my micro caps. Eventually, I did rotate about half my retirement account to mega caps. But this is an environment where I think most retail, aside from the really smart ones that just like buy and hold Apple, all right. But like I think most retail, they're into the smaller companies, or into the growth stocks, or into the arcade type of stocks, or into the biotechs, and this is a perfect environment for that. This is a perfect environment to collaborate. I'll look at GME. The thing, Vince, is I just don't know the fundamentals of GME. Teladoc, I know a little bit better, but let's look at GameStop here. And yeah, I mean GameStop, you got all these candles. You got to get over here. What is this? 1741, 1756, and then make a move to the 200 DMA. You got that. But anyway, going back to my point, this is a perfect environment for retail, right? Retail, they want to invest in the next product that's going to change the world. All these exciting things that unfortunately 90% of them go bust. This is why retail has such a hard time, because these new innovative products, they need funding. The chance of them succeeding are low. Like, it's a very challenging environment, but this is now the perfect environment for that. So let's collaborate. Give me your favorite stocks, your favorite small caps, your favorite growth stocks, and we'll take a look at them. We'll look at the fundamentals, the catalysts, and the technicals. I'm talking about not necessarily just today. We are at an inflection point here. I'm talking about for the foreseeable future until something changes. All right. We don't know what the future is going to hold. But as of now, I think going back to this ARK chart, we're at the bottom. We're just starting this cycle of risk back on again, I believe, as of now. Again, unless something changes, which I always have the right to change my mind as new data comes in every day. But for right now, if ARK goes towards that 200-week moving average in 2024, 72, 73, I mean, retail is going to have a fun year. All right. Your little micro caps, your great new innovative products, those are going to outperform the Microsofts and the Amazons of the world, in my opinion. So really good environment for collaboration with retail to figure out these micro caps and small caps, which ones are going to succeed. And you see that. Same as ARK, conceptually speaking. Yeah, I mean, IWM and ARK both will benefit from lower rates for sure. You can just see from based on where ARK was before, that ARK probably has more upside in those growth names. But IWM, I think, and ARK are both going to outperform QQQ SPY, in my opinion. Okay, so going back, and do I prefer ARK? Spread it around, man. Diversification's good. All right. So in any case, I think ARK is probably it's you can see from the history of the chart, the risk reward. It's higher risk, higher reward with ARK. All right. IWM, probably, I'm just guessing that the profitability of the IWM companies is better than the profitability of the ARK companies. So, but in any case, going back, let's try to wrap this up over here because I got to make some trades. So, top picks for today. You know what? Let's see if we can kind of order this a little bit. I want to be a little sneaky about this and see if there's something that hasn't run up enough, or that's just starting to run up, something like that, because it's tough. If you're not in Carvana yet, right? What, you're going to buy it at 45.70? Maybe, if you have a long-term outlook, looking for the mid-50s, but it's not easy. I think Snap is one that's still really early with this break of 1650, 1655, heading to the 20s. I think that's really early. Rivian, I really like. Also, this looks kind of early. Looking up this chart here, right? I think this one looks pretty early compared to a lot of charts that already are past their recent candles. These, like most charts, they're probably the equivalent of this. The stock Rivian would already be at like 25 or something like that. So I think Rivian has a little bit of catch up to do. Teladoc, I think, has really been down the gutter and has some catch up to do. So I'm not sure that, if you're not in any of these, I don't know. It's like buy the dips. I'm not going to tell you how can I tell you to buy stuff when they're gapping up? All right. It's hard. Okay. But I'm going to be looking for opportunities, I think, to add more Rivian, add more Snap, add more Teladoc, Carvana, I have enough. I'm just going to be riding that until either resistance or until it starts breaking down. So that's what I got here. All right. And I really like this list from Carvana all the way down to Amazon. All right, guys, let's make some money. And this is just the beginning. I'm telling you, this is just the beginning. As long as those interest rates come down as advertised in 2024, this is the time for us to collaborate and make some money on our favorite type of names on risk assets. All right. Thank you, everyone. I'll see you tomorrow morning. I can't really stay. I want to manage some trades right at 9:30 a.m. Thanks, everyone. Take care.